Masters Season 2, where we bring you in-depth conversations with the visionaries shaping industries and redefining business landscapes. Today we have with us Mr. Shivashish Chatterjee, co-founder of DMI Group and managing director of DMI Finance, a leader who is reimagining the way credit is accessed and distributed in India. Founded in 2008, DMI Finance has emerged as a leading non-banking financial company that leverages technology, innovation and strategic partnerships to democratize access to credit across the country. Shiv, thank you so much for joining us on Business Masters.
Thank you for having me here.
Let's get right into this now. DMI Finance was founded in 2008. The vision was to transform credit transmission in India. What was the driving force behind this mission?
I think calling it a mission is maybe a little bit grand. I think the driving force simply was that both my partner and I, we had grown up in India, and then we had left to pursue studies and a career in the US. And at some point, we came to the realization that there was a lot more happening in India in financial services. But a lot of that innovation and development was in the equity markets.
Right.
And so our hope was that having spent at this point what was close to 15 years each in credit markets and fixed income markets in the US, that we could bring some of that expertise to India as the Indian credit and debt markets opened up.
All right, and how would you define your journey from that idea to what it is now?
I think it's been a fantastic journey. It's been a roller coaster at very, very high speed is one way I would think about it. We have reinvented ourselves several times over the course of the last 15 years. And I think we have succeeded in some of our original goals, which was to bring credit accessibility to both companies and individuals that were maybe not as well served by the existing ecosystem as they should be. And so over that period of time, we have, made loans worth several billions of dollars, addressed millions of individuals in terms of underwriting them. And honestly, I think we are at the point where I feel that the journey we've experienced so far is more exciting than what we could have envisioned when we started it on.
All right, let's also talk about DMI Finance's core values, which include strengthening communities, changing lives. One, what does that personally mean to you? And also, one defining moment that made you realize the impact of the company.
So I think the most significant defining moment for us was right after the COVID lockdowns. And if you recall, much of the world, but India in particular, was experiencing a very high level of upheaval because of COVID lockdowns. Families were, estranged. They were, we obviously have a large migrant population, and we had people who were stuck hundreds and thousands of miles away from home, locked down, unable to move. And then the lockdowns got lifted. And at that point, we still had a big problem, which is that most of education was remote. And you have children in tier 2, tier 3 cities, even in the major metros, who didn't have access at that point necessarily to education because they didn't own a tablet or a smartphone. And stores weren't open. Right? So because feet on street weren't out there, so electronic stores weren't open, you couldn't go out and buy one. In that moment, DMI was among the only lenders, and the program that we had at the time with Samsung, which is called Samsung Finance Plus, was the only program that was open and ready and able to serve the needs of people who were far from home, kids who needed to attend school remotely, small businesses that needed to get back on their feet. And the number of testimonials we got in that time and the heartfelt gratitude that we saw from people who were so grateful to have an option when everything else was shut, I think that really brought home how important a role we were playing in that time.
Absolutely. Thank you so much for sharing that with us. I'm sure that really affirmed the impact that DMI has had on people and in this space. And that being said, as an RBI registered NBFC, it plays a key role, of course, in India's credit system. How do you see the role of NBFCs generally evolving in the Indian financial landscape?
I think NBFCs are going to continue to be an indispensable part of the credit ecosystem. The role of NBFCs and credit providers in general is to match the risk profile of a borrower slash investment with the risk profile of the kind of capital which you are providing, right? So NBFCs and banks are both intermediaries. We are bringing sources of capital as close as we can and together to the demand for capital.
All right. And again, you've shared that story with us. That being said, some of the other challenges that you faced in the early days of building DMI Finance, I'm only assuming this was a Herculean task.
I think the biggest challenge that we faced in the very early days was one of credibility.
Right.
So bear in mind, it was my partner and I, both of us having spent at this point, more than 20 years outside India. And we come back here and we set up a lending business. And in the early days, we were lending to real estate projects. And pretty much everybody told us that this is going to end in failure because we don't understand the local ecosystem, we don't understand the local borrowers, we don't understand how it works, and people are going to take our money and never come back. And obviously that, caused us to really pause and be very, very careful about what we did. But initially, it was really a matter of building credibility among the local, the borrowing community, essentially, so that we could get access to the right set of companies.
Absolutely, I can only imagine. Now, credit accessibility, that's traditionally been skewed towards certain demographics, I would say. So how is DMI Finance working towards financial inclusion when it comes to that?
So I think in India especially, financial inclusion and credit expansion go hand in hand. So if you think about it, at this point, 70% of India's household credit goes to people who have very high CIBIL scores.
Right.
And new to credit, which is the financial inclusion piece, is 5% or less, right? So I think the key challenge for lenders is not that financial inclusion leads to increased risk necessarily. The key challenge for lenders is to find those segments, those pockets of borrowers who are not being addressed by the existing formal lending ecosystem, and who yet are very creditworthy. And a large part of that involves expanding the definition of what constitutes asset. So in India, again, so out of roughly 30% of bank credit in India goes to households. Out of that 30%, more than 20% goes to secured credit, which means that only households that have assets, a home, a car, something else, get access to 60-70% of bank credit. What happens to the rest of them?
Right.
The rest of them, we already know that they are only the cream of the crop is really being served.
Right.
So a large part of the problem is redefining what constitutes asset.
Right.
And the way we have thought about it, and I think it's pretty much accepted at this point, is that human capital, the future ability of an individual to earn a living, to be able to service debt, to unlock their potential, is as much an asset as is a physical asset like a house.
All right.
Similarly, a person's data is as much an asset as a physical asset like a car. And the government has moved in that direction quite forcefully, I would say, in recent years, with the introduction of tools like account aggregator that the RBI has introduced, which basically takes an individual's financial data and allows them to use that as assets in terms of credit underwriting. So we are very hopeful that as we grow and as the ecosystem grows, financial inclusion and responsible credit are going to be synonymous with each other, as opposed to something that are at odds with each other.
And that being said, we were talking about data as an asset as well. What do you see being the biggest opportunity for NBFCs in India's rapidly expanding credit market?
I think NBFCs are, as I said earlier, NBFCs are going to continue to expand their footprint. I think the Indian credit markets are going to mature more over time, do a better job of matching risk appetite to risk profile in terms of capital. And the biggest role played there are going to be by NBFCs. Indian credit is a highly regulated ecosystem, unlike many other countries. And banks in India are more regulated than NBFCs are. And so NBFCs basically bear the burden of innovating on fronts that allow for a better match of risk and of risk appetite and risk supply. And so I think a lot of the innovation in terms of product that we've already seen from NBFCs and fintechs to a large extent, we're going to continue to see it going forward.
All right. And what's one lesson from your early career that perhaps still influences your decisions today, leadership decisions?
Oh, you mean like very early career?
Right, I mean.
So I think, we're all shaped by our early experiences. And both my partner and I started in financial services in the mid-1990s.
All right.
And one of the defining moments for me over the next few years was the Asian currency crisis. And at the same time, in the US, was the collapse of one of the largest hedge funds at the time, long-term capital management. And the LTCM collapse was largely driven by overexposure to debt. So they were over-levered, and they had relatively illiquid assets. And so very quickly, what was a liquidity crisis turned into a solvency crisis. And we saw the same thing happen in the global financial crisis with Lehman Brothers and Bear Stearns, where again, leverage, one would argue excessive leverage or a mismatch of assets and liabilities, led to a liquidity crisis turning into a solvency crisis, such that two of these oldest financial firms in the US basically are no more. And that's the lesson that I think both my partner and I took away. So even today, when we have investors or banks or lenders, potential lenders looking at our balance sheet, their first observation is that why do you have so much equity and not more debt? And I think the short answer is that we will always be lower leverage than our competitors, because that was our defining experience growing up professionally.
All right. So would you say that's a better problem to have?
It's definitely a better problem to have, in the sense it leads to much better sleep at night.
All right. Okay. Well, let's switch gears now. As a leader in India's financial sector, how has your leadership evolved over the years? How do you think you've changed as a person, perhaps, as well?
So I think you'll have to ask my colleagues that question to get a real answer. But I suspect I've become a little less demanding, a little less harsh, and I suspect that I have become more process-oriented than outcome-oriented.
All right.
And the reason I say that is that when you're a brand new startup, right, or in the early stages of a business, it is very important to be able to show immediate results. And those results are what lead you to the next stage of your growth and your expansion and attract investors and attract business and so on and so forth. But after a time, it is far more important to have replicable results.
Okay.
To have results that you can repeat over and over again. Because as we mature as a company, the capital markets are much more rewarding of replicable success than they are of one-time success. And replicable success only comes from process. So I think I've become a lot more process-oriented.
All right, so setting systems and not goals, that's the
Yes.
motto, I'm
Yes.
assuming. All right, so what does a typical day look like for you as the managing director?
I wish there was a typical day. Then it would be much easier for me to plan it. There's no really typical day. So I spend, more than half my time in the U.S. As a result of which, my workday in the U.S. starts about 4:30 in the morning
All right.
and goes from 4:30 to about 12:30 in the afternoon, which means that it's really the burden of my travel and the time zone shift is on my colleagues here, who don't get to start later because I'm in the U.S., but get to end later because I'm in the U.S. And during the day, it's talking to different teams, talking to outside partners, to potential new businesses, a whole host of things. We have within DMI we have 3 different financial services verticals. The NBFC is our consumer and MSME lending vertical. We have DMI Housing Finance, which is a home loan lender. And then we have an asset management business, which is under DMI Alternatives. And so each of those has a different set of requirements, a different set of priorities. And so I would say most of my time goes on Zoom calls when I'm not in India.
All right.
And when I am in India, a lot of it goes in brainstorming with the various teams.
All right. Perhaps that's why you see better systems now.
Yes.
And as a company that works with a broad spectrum of borrowers, of course, and we were talking about this earlier as well, how the biggest challenge perhaps was to build credibility. Now that you perhaps are there, I would say, how do you ensure that trust remains a cornerstone of your business?
Oh, I think trust is a cornerstone of the entire lending industry.
Right.
Without trust, there is no lending, right? So credit is basically, if you think about it, pretty much every transaction is a credit transaction, right? Whether you go to a restaurant to have dinner and you pay, after you've eaten your meal, not while you're eating your meal. Or you go to the grocery store or you pick up the phone and you call your grocery store and they deliver you the goods and then they charge you at the end of the month. It goes from, credit is all about whether it is a credit for a few seconds or whether it's a credit for a few years.
Right.
And so it's all about trust. And I think the only way to maintain trust is to be, first of all, be completely fair to both your clients, your borrowers, and your investors. And completely fair means that you have to be driven by a set of ethics.
Right.
Right, and those ethics are, the RBI has a fair practice code for lenders, which I think is the starting point for any lender. We have to go above and beyond that. And going above and beyond that means that we have to every day earn the trust of our borrowers.
All right. And as, of course, your role involves making high-stakes financial decisions daily. That being said, how do you unwind at the end of the day?
So unwinding at the end of the day for me involves, I read a fair amount. I really enjoy distance running.
All right.
So distance running is sort of like a meditation almost. When I'm running for 2.5, 3 hours at a time, it's a little bit of meditation. It also gives me alone time to think through problems or strategic decisions that we might be facing. Family.
Right.
So spending time with family is a huge priority.
All right.
Especially as our kids get older and they no longer want to spend that much time with us as they used to. So making sure that we get that.
Right. Now you mentioned you read a fair bit. So what's one book or resource that's deeply influenced your thinking or your leadership style?
I think I'd be hard pressed to find one book, but I'll say this: there are several books that have influenced my thinking over time. And they have depended on when I have read them, like at what stage of my life.
Right.
Right. So for instance, and this is going to be a cliched answer in many ways, as an undergraduate in college, I was very enamored of reading Ayn Rand,
Right.
which is exactly the age group that is very enamored of Ayn Rand. All about individual responsibility and the role of the individual, the power of the individual, decision making, and how powerful individuals shape the course of history and so on and so forth. And it's all about how power is in the hand of the individual, right? And then more recently, as in the last 10 years, I think a book that really shaped my, or was eye-opening for me in many ways, was Daniel Kahneman's Thinking Fast and Slow. So Nobel laureate in behavioral economics, basically invented the field, and led us all to realize that a lot of the decisions that we think we are making independently are really influenced by factors that we are even unaware of.
Right.
And so what appear to be autonomous, independent, well-informed decisions are really riddled with biases.
Right.
And a lot of it is unknown bias. A lot of it is unacknowledged bias. And so that has forced me to reevaluate, or at least think through what might be biasing my decisions or my actions when I'm reaching a conclusion.
Right.
Right? And I think just the awareness that there are factors that I'm unaware of that could be influencing my thinking, I hope makes me be a better thinker or a better decision maker.
All right. And what advice would you give to someone just starting their career in the financial services industry?
I would say, if you're an entrepreneur, I would say that please enjoy the journey and not the destination, because 99% of what you do is going to be the journey of getting there. And so if you don't enjoy that, both the ups and the downs, there are going to be lots of ups, lots of downs. Enjoy them both.
All right. And just to expand on that, what's a common mistake that young professionals do make in finance, and how can they avoid it?
So again, I mean, there are, when I think of common mistakes by young professionals, I would say there are two categories of young professionals. If we are talking of young entrepreneurs, right, I find that one of the mistakes that I made as a young entrepreneur, and I would say I would include my partner in that, we both made it together, we didn't build our team and our human resources capability early enough.
All right.
There is no way that a company can scale if you don't have the appropriate human resources supporting you. And I think by and large, most companies in India ignore that, or most companies, I think most startups anywhere, ignore that aspect until it's too late. And we sort of ignored it until it was almost too late, and luckily we course corrected.
All right, and as someone, of course, who's built a financial institution from the ground up, what's a leadership trait you think is a non-negotiable for success?
So a leadership trait, non-negotiable for success, many come to mind, I guess. But I would say that the thing which is critically important is to acknowledge to yourself that success belongs to the team, and by and large, failure belongs to you.
All right.
Because your job as a leader of a team is to encourage them and inspire them through the dark times. Is when the chips are down, is when things are not going well, when the business is not going well, when you feel like you're losing on every front, that's when it is most critical that you can inspire your team, which means that it boils down to you have to own the failures, and you have to share the success.
All right, and that brings us to the end of this insightful conversation on Business Masters. Shiv, thank you so much for joining us and taking us through your journey and sharing your insights with us today. And to our viewers, thank you for tuning in. Don't forget to tune in to Business Masters for more conversations with industry leaders who are shaping the future of business. Until next time.